Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, it's May 18th, 2012, and like we do every Friday, we're going to go over every major market index that we actually track, all the charts that we track at PerfectStockAlert.com, so that you guys know everything that I know moving into the week ahead, and you guys get an idea of what I'm looking at, the best opportunities for the week ahead. So this is a video that we do every week, and if there's any video that you watch, this is the one that you definitely have to watch. The first thing we're going to do, looking at today's markets, we're going to cover 16, even though there's actually 18 that we track. I'm not going to cover gold and silver because I looked at them yesterday. If you want to see what I think about gold and silver, just look at yesterday's market analysis and you will know, okay? So rather than just repeat that, I'm just going to save some time. Alright, we're going to look at Australia's market, the AORD, and this one is obviously in a clearly defined downtrend. We see we have a nice lower low here. No candlestick formation indicating any major buy pressure or support here. So even if we were to get a bounce in this market, I wouldn't be buying that bounce. I'd be looking forward to test this low at a later point in time and actually go lower. In this current situation that I see, you're going to see a lot of this in these different markets that we're looking at. However, because we are under the ultimate oscillator of 30 line, that is where you start getting bounces, and so you want to keep your stops in place and keep advancing them. In this particular case, what I've been doing from back this time frame, we went short again here. The following, our stop was here when we initially got into the position, and then we advanced the stop to the high of each candle to continue to lower that stop loss limit. At this point, I'm right here. If you don't want to risk that, if you want more, you could simply advance it more. But that's how I'm going to trade them almost every single time. Will be like that. There are cases where you see an overshoot to the downside, and you say to yourself, "Oh, you know what? I know this is a bounce coming, so I'm going to go ahead and take my profits now. Wait for that bounce to go on." There is a rare case where you don't do that, and that rare case is actually what's developing right now, where you have a market that is just finding no buy pressure. It's starting to fall off a cliff. When you get that, you want to stick with that short position and get back short anytime that you get an opportunity, and continue to do that until you start getting stopped out. When you start getting stopped out, then you want to say, okay, wait a minute, we're starting to find a bottom here. But right now, we're not seeing that issue at all. So again, Australia's market, obviously in a downtrend. We're still short. We advanced the stop to this point, and I would stay that way. Looking now at the Dow Jones Industrial Average, on this particular situation, we have a very good move to the downside, making lots of money on this trade here. And we've advanced the stop to the high of today's candlestick, 1 cent above that high. As long as it continues to move lower, we will stay with it. However, again, ultimate oscillator under the 30 line. This is where you start to get bounces, but again, doesn't have to happen immediately. Doesn't have to be a major bounce. We've seen some cases where you only had a single day to the upside before she rolls over and back to the downside. So again, don't just guess that the market's going to bottom here, and stay with the short positions until you get stopped out. That's paramount in this market. Now, there was some news out, and we know that there's 8 leaders from 8 major economic countries out there who are gathering this weekend to try to stem this economic crisis. Here's the deal. They've been telling you for I don't know how long now that it's not a big deal, that the European financial crisis is not going to really affect them, and so forth and so on. If that were true, why are they getting together right now? Okay, that either means that they are lying to you in the past, or they're incompetent. In either case, you wouldn't listen to them. So basically right now, I would expect them to come out with trying to say something over the weekend, or at least on Monday, to say something that will try to get the markets to bounce. Because we're already at the oversold condition on the ultimate oscillator below the 30 line, I would be expecting that anyway. But until that actually happens, stay with the short position. Continue to stay with the short position until the market stops you out. Looking now at the French CAC 40 index, you can see that we still have no major reversal signal, no major buy pressure, nothing going on in this market. Just we continuously go lower, 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 and lower. I would stay with this market on the short side. We've advanced the stop to 1 cent above today's high. Eventually, we will be stopped out, but because the overall trend is clearly down, we will be looking for an opportunity to re-enter on the short side even after that bounce happens. So there's no reason to be a buyer of these markets whatsoever. Again, you'll notice also the 200-day moving average. We closed below that back here, jumped above it, unable to sustain that, fell back below it again and then again, each time diving deeper than we had before. We're seeing the breakdown of markets, not just as a pullback or something of that nature. We're seeing a change happen where we went from a bull market to a bear market. Looking at Italy's Milan market, the FTSE MIB, you'll notice that we actually said you could go short today, as our signal was from yesterday. It's closed, so we told you to go short today. You had an opportunity to do that in intraday opportunity to the upside here, and then she just sells off again, going lower. So again, you should be short at this point in time. You can be advancing the stop from this point here down to the high of this point here if you'd like. But right now it's such a small difference here, and we're still trading within the range that you would be taking the short opportunity. I wouldn't advance the stop just yet. Wait till we get it closed down here somewhere, and then I start advancing the stop. The German DAX composite is still trading above the 200-day moving average, and we've seen several different markets out there that are already trading below the 200-day moving average. And those can be leading indicators telling you that this is the direction the markets are heading. So when you find situations like this where you're not yet trading below the 200-day moving average, that's actually the better situation. This is the one that's not as oversold as the others. So this is one that I would actually, we talked about this yesterday. I told you could actually take a short position today. You had a little opportunity, intraday activity to the upside. Could have been shorting that, and if you did, you're making money to the downside now. You can actually advance the stop loss up to this point if you'd like, but again, it's a minimum. I mean, if you've got a little move to the upside here and then she started going lower, I don't want to get stopped out in this situation, so I just keep my stop here for now. The Hong Kong Hang Seng Index is actually trying to form a bottom here. You can see that you had this massive sell-off right here, well below the 200-day moving average. Now she's giving you a little hammer candlestick formation. You'll notice a couple things about this. Number one, you were below the 30 ultimate oscillator, the 30 line there. That's where you start to expect to see a bounce. So to see this formation here makes sense. You should be getting to a point where you get a bounce. You've also had a major sell-off to the downside here. This gives a lot of potential for a bounce as well. And again, if you are going to go long this situation, I would understand that. You would set a stop right here off of this low point, 1 cent below that, and if the next day gave you 1 penny higher than this high on this candlestick, you could be a buyer, set the stop right here like I said, and then look for this to continue to move higher and test this 200-day moving average. That'd be something else that you could be looking to trade. But again, it is a counter trend trade because the overall trend is obviously down, so you don't make expecting to get rich in single trade here. Just keep a tight stop, advance it every single day as the market closes until you are eventually stopped out. I will not be taking that trade. I don't like counter trend trades in a major market sell like we're seeing right now. There's still a lot of news we don't know about that hasn't actually hit the wire yet. So if that does happen, you can see this fall apart really quick. And so again, I'm not going to be taking that. However, if we do get a jump to the upside after this major sell-off, we do get a little bounce up here, and we start getting a peaking signal, typically at about the previous support line. Once that's broken, it's going to be where you're going to find your resistance, and that would be actually filling this little gap that you have here as well, from this close here to this open here. So if you get something kind of a sell signal in this situation, and I start to get some selling signals again, I would take that on the short side and continue to trade this lower. The India Bombay Stock Exchange, or the BSE, we've already been stopped out of this 2 days ago. We were stopped out on this one, and I would just continue to watch it right now. She is actually falling lower still, but she's still making higher highs than we had before. So I would stay with this one, keep watching it, but I wouldn't be short at this moment. I want to look for a nice quality entry opportunity. Right now, I'm just not seeing it. If we were to get another little jump to the upside here after this major sell-off, we were looking for resistance to be where the support was. The support was here. If we found resistance at about this level, also testing the 200-day moving average, then I'd be looking for an opportunity to get short again. Right now, I'm just watching it. For those of you looking to play the Japan markets or the Japan iShares, the EWJ, you can actually get short again on EWJ now. And let me show you what we're looking at here. You are below the ultimate oscillator 30 line, but as I've said before, just because you get down there doesn't mean she has to do a major bounce. This could have been all the bounce you're going to get. You've seen that before. Here. Just because you're going to get a bounce doesn't necessarily mean it has to be a big one. And when you're in a major market sell-off, or a slide as we call it, you can have a single day to the upside, a higher high, and then you get stopped out. You're short, but you want to look for an opportunity to get short again. One of the telltale ways to find that opportunity is when you've turned back around and sold off again and going lower, closing lower with a nice candlestick formation heading lower. Everything right there looks very bearish. Keep a tight stop right here for now, and then be advancing it as you go lower. At some point you will get a real bounce that will actually be larger than a single day, but right now you can continue to stay short. The London Financial Times Index, or the FTSE, this one had a 2-day bounce from 1 and 2, and then she reversed to the downside, giving us a very clear sell signal. She made a lower low, and she also gave us a bearish engulfing signal right there to trade on. That's been profitable for us, but again, notice that you were oversold there on the Ultimate Oscillator. You got a couple days to the upside, and then you just started moving lower again. So don't just look at the Ultimate Oscillator as she's below 30, therefore I must cover shorts. That doesn't work that way. So again, I would continue to stay with this on the short side, keep advancing the stop loss limit. Notice how you were repelled away from the 200-day moving average when before you were finding support. Your markets are changing. You are in a bear market. Looking now at the NASDAQ, we have actually nailed this one. There's not much we could have done better on this particular chart. Everything we said about this chart happened. We talked about this low point being taken out way back here during this time period. We said we expected this to fall apart because of this major gap here, and here she fills, and then she kept going lower. We said this would keep going lower, look for an opportunity to get short. We took that, we've advanced the stop along the way down to here. Now, I would stay short. There's nothing here that tells me to be looking at this as a bottom. No hammer candlestick formation. We are in a very strong sell-off here. You are below the Ultimate Oscillator 30 line, so you could get it bounce at some point. Right now, I don't see it at the moment, unless you get some news over the weekend about these guys have come together and found some way to, rally the market for a day or two. But right now, I don't see that. Just stay with it in the short position and wait until the market forces you out of it. Until then, stay short. You also notice in this particular index, you are not below the 200-day moving average. Now, again, when you look at all these other markets we've seen globally that are already below there, those are leading indicators telling you this guy is headed in that direction. So, again, I would be shorting this guy before I'd be shorting those that are already below the 200-day moving average. When the economy does not look all that promising, the price of oil goes tumbling down, and that's what you're basically seeing here. You've been seeing it for a while. What we've got right now going on in this situation is we're staying short. We've advanced the stop to 1 cent above today's high. Continue to stay with that trade. Notice that you are below the Ultimate Oscillator 30 line. At some point, you will be stopped out. You've had 6 consecutive days to the downside here. That is above average for this particular chart. You can look here. You can see you've had 3, 4, 5, 6 before you got a bounce here. You had the 3, 4, 5, 6 before you got a bounce here. So again, if you are expecting this market to fall straight down, just remember no market goes in a straight line up or down. The UUP, or the US Dollar Bullish Index Fund, this one is actually a very interesting chart. We actually saw the reversal happen, but we got stopped out before we could take advantage of this. You notice we fell a little bit lower than our entry point there, and that stopped us out. And then she takes this major move to the upside. There have been 12 consecutive days, count them 1, 2, 3, with higher closes than the previous day. This is a monster move to the upside here. Now we're getting a little bit of a pullback. Alright, a couple things to look for here. Number one, is this pullback the actual peak? No, it's not, because there's no shooting star formation up there. If there were a shooting star formation, I'd say, hey, there's major sell pressure up there. Don't be looking for this thing to keep moving higher. We're not seeing that. In fact, I expect we will move higher. Where this pullback here is going to be a buying opportunity. Now, I want to time it right, which means I want to pull back somewhere. I don't know where she'll stop at, but at some point she's going to give us a hammer candlestick formation. I hope at that point we'll get a reversal, and then I would be a buyer of that situation there on the Ultimate Oscillator, expecting a price of $1 to keep moving higher, at least to test this high point. Right now, seeing a little peak out, taking some profits here, heading into the weekend. That makes sense. You are up above the Ultimate Oscillator's 70 line where you start to get your peaks do form there. So that makes sense. There's nothing wrong with this chart whatsoever. But again, you've had 12 consecutive days to the upside. That is above average, but it also tells you something else. There's a strong demand for the dollar being bought at this point. They're looking to say this is oversold. We're taking advantage of this rather than buying stock. They are selling stock, which means they are in fact buying the dollar. So when you have this opportunity like this, you want to be looking at this and saying, okay, it's telling me that we're probably going to see a bounce in other markets where we're seeing a sell-off, and this one. So for the fact that you're seeing a gold bounce here, it makes sense. Looking at oil just a moment ago and showing you that you could see a bounce there, that would make sense. The fact that you're looking at some major market saying you could see a bounce there as well, that would make sense as well. It's not as tightly as just because one goes down doesn't mean the other must go up, but typically they'll run in tandem like that. So keep an eye on the fact that your markets may bounce here, but I want to be a buyer on the bottom of this UUP chart here, and then looking to sell when I am buying. Okay, so you got the inverse relationship there. The Russell 2000 Small Cap Index, or the RUT, this one we stayed short with it, keep advancing the stop. We're now stopped right here. We're closing down below the 200-day moving average. Again, you can use that for a leading indicator and say, wait a minute, if this particular average in the U.S. is already trading below the 200-day moving average, are the others headed that direction? The answer to that question is yes. Look for a couple different situations to happen here. Number one, you are below the 30 line of the ultimate oscillator. You guys know that at some point in time you're going to get a bounce there. You've had 1, 2, 3, 4, 5, 6 consecutive days of lower closes than the previous day. This doesn't go straight down. Of course, you're going to get a bounce at some point. You're going to find resistance at some point at the 200-day moving average. If you were to reverse right starting Monday and start moving higher, I would look for resistance on this previous support line, which is now going to be acting as support. But again, I'd be looking to get short every single case that I'm looking at all these markets. I want to be getting short the markets or being long the inverse, like the VIX or the UUP, something like that, whenever they do shift on this. Okay, so remember to stay in a bearish mentality in these markets. Don't listen to everybody out there telling you, oh, the market had a big day to the upside on Monday if that happened or something like that. Don't think about that. Think about the trend. The actual direction of the trend is down. The only way this guy reverses if he makes a move way up here and takes out this high point, then maybe you got a reversal. Don't do that. You ain't going nowhere. So you got a lot of upside there that's just not going to break through. We've already talked about this in the past. Major resistance here, 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 even back there, and then again here. Head and shoulders formation forming there. There's nothing bullish about this chart. The S&P 500 Large Cap Index, with the SPX in this particular case, you can be trading SPY as well. We were short back here, saw this nice slide down here, keep advancing the stop to the high of the day. We were eventually stopped out, and then she just started rolling over again. So we go short again. We told you back on this day that if she started to make a lower low, you could actually short it. And so on that day, you went short, and you continue to be that way, and you have a stop right here at this moment. Right now, you have 6 consecutive days to the downside. Again, no market falls straight down. Eventually, you will get a jump to the upside, and again, you have the ultimate oscillator below the 30 line, which is where you start looking for that situation. But again, look at the overall candlestick formations. Nothing bullish about these situations. Also, you're still trading above the 200-day moving average. You can't even see that on this chart right now. It's at 1278.22 at the point. So right now, I would be staying short, looking for another opportunity to get short if I was stopped out. Looking now at Canada's market, the Toronto Stock Exchange, TSX, you can actually get short this one right now if you could, or if you had watched the videos from the past, you know how this works. When you get stopped out like we were here, and then she begins to sell off again, going lower, this is actually an opportunity to get short again. So we took the same situation back here. You were short here, we continue to trail to stop, you eventually get stopped out. It was actually not the same day, but the next day you started moving lower again. We said you could short here, and then you start moving lower, you get stopped out again, she starts going lower again. Some of these markets are going to be harder to trade than others. You'll get this little knee-jerk reaction, little bounces to the upside, especially when you're under the 30 line, the ultimate oscillator. Whenever you get those situations, if your stop is set too tight, you will get stopped out repeatedly. I'm not really going to back my stop off on the situation right now. I don't think it's that big a deal right now. I'm continuing to stay short on this market. Again, you don't want to be trying to buy these markets. Here's a quick look at the volatility index, or the VIX. The VIX runs the inverse of the S&P 500. So whenever your S&P 500 is actually going down, you expect to see the VIX moving higher. That's how those run in tandem with one another. In this situation, we obviously have a clearly defined uptrend. I would stay with this if you were long this. I'm not. But anytime I get a pullback in this market, I'm going to be looking for a bottom and an opportunity to get long, because look at this as being an uptrend, obviously, and I would look for any pullback to be just temporary before we go higher. So any sell-off any bounce that I would see in the S&P 500 would simply be the same situation inverse, where I would look at that and say, okay, this is a bounce, counter trend bounce, but I want to look to sell it again because I'm looking to go long the VIX next time I find its bottom. So again, this is just very simple. We're very clearly defined it's going up higher. A lot of people look in this market and saying the ultimate oscillator right now is up above the 70 line, and then she should be finding a peak. Don't do that. Let the market tell you where the peak is at. Don't try to tell it where it's at. Right now, we're still seeing increasing momentum here. Look at the, hang on, let me show it to you. Okay, here we are looking at the MACD on this particular chart. You can see that the histogram bars right here are still getting larger. The distance between this moving average and this one here are getting wider apart. That tells you that momentum to the upside is still increasing. You're not peaking here. You start peaking when you start to see a reversal in that situation. You start to see the bars are heading in the opposite direction. You're not seeing that right now. You're still climbing higher. You're still getting more momentum to the downside in the markets and more momentum to the upside in the VIX. So stay with it if you're long, or stay with the markets short if you're short. So if you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend, aka share our videos online. This is the weekend, so if you guys have nothing to do, I'd appreciate it if you would share our videos online. We've actually seen some decreased activity on our website. A lot of that's because the market's going down. People don't do with that, and they just run away and they hide in a hole somewhere. But there's lots of money to be made selling markets as opposed to just buying them. So yeah, if you got a friend out there that you'd like to share our videos with, we'd appreciate that. It helps us, and the more we get help, the more we can help you. God bless, take care, enjoy your weekend, and be safe. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.